For the time being, let's focus on DCM Shriram. The company's board has approved entry into business of advanced intermediates. They will be investing in an epoxy resin and downstream products with a likely investment of close to around 1,000 crores odd. To discuss this and what's the impact of this development, Mr. Amit Agarwal, the Executive Director and CFO at DCM Shriram, joins us on the show. Hi, Mr. Agarwal. Good morning and good to see you in. Well, give us the rationale behind this. You're going to be setting up this unit. One part of the street would say, well, it's a commoditized unit, this epoxy resin. But also, I think it could serve as backward integration. So fill us in with some rationale behind this investment.
Yeah, so see, there are two purposes for which we have decided entering into epoxy. One, as you rightly said, we are very uniquely placed to have complete forward and backward integration. We start with caustic chlorine. We are implementing our epichlorohydrin project, which will come up in about a quarter or so. And then we'll get into epoxy and then getting into further value-added products, which will be like hardeners and formulated resins. So that's the idea, that be in a complete value chain. Second objective of being into epoxy also is that currently the chemicals business is into caustic soda chlorine. Now, once we have epichlorohydrin, hydrogen peroxide, epoxy, and the value-added products, there'll be a basket of chemicals that DCM Shriram will be into. So that's the purpose and the objective behind entering into epoxy, which serves as a platform.
Okay. So can you tell me what is the current production in India for epoxy resins and what will your capacity be here? How much of this will you be exporting in terms of your production? I mean, what are you looking at over the next 1 to 2 years?
Yeah. So current capacity in the country is close to about 200 to 250 kilotons per annum. And the demand today in the country is close to about 300 kilotons per annum and growing at about 10%. So that's the market. And what was the other question?
So your own, from your production that you're doing, how much of it are you looking to export? What is the kind of export potential? I assume this 10% demand that you spoke about is in India?
It's in India, yes.
Okay.
So see, we should largely be able to meet domestic gap itself, because as I said, our it's 300 tons, current production is about 200, 250 tons. And therefore, we should be able to meet domestic demand. But then there are possibilities of export as well, given that, globally this product is growing at a very fast pace. And given its, its qualities such as lightweight material, it's into coatings, into composites. So I think it has a lot of growth potential. It has uses in industries like aviation, in windmills, in automobile. So I think there is a lot of scope for growth in this business.
Mr. Agarwal, hi, good morning. I mean, I think in early January, you signed a MoU with the government of Gujarat to invest some 12,000 crore rupees by 2028. Could you tell us, give us a little bit of details? Is this a broad agreement or, what stage is this at? Just a MoU or is there some finality to it?
So this is an MoU where we have given our intent that we want to invest 12,000 crores. In the past also, we have invested about 6,000-7,000 crores in Gujarat in last, I would say, 5-6 years. So the intent is that we will invest that kind of an amount in next 3 to 4 years in Gujarat. And then epoxy is one of them.
Okay, so that's the 1,000 crores, right? Which you said.
Yeah. So we are in the process of acquiring more land, and therefore we will set up more projects in Gujarat.
Okay, and which segments is this investment going to address? What are you looking at? If you can give us a broad idea. And this money will be sort of invested. I mean, you'll have to take it up to a board for some firm resolutions, etc. Right?
Yes.
So all of that will happen.
All of that will happen over the period of time. Currently, we are looking at multiple options, but primarily it will be in the chemical space.
Okay. All right. Amit, give us a few more details. Out of this 1,000 crores that you're looking at spending, for this epoxy unit, what is the asset turnover? By when will it get commissioned? If you could brief us on that. And also, how do you fund it?
Yeah. So the asset turn will be in the range of around 1.75 to 2x. And, funding will be a mix of debt and equity. and it should get commissioned in next 30 to 36 months.
Okay, and you want to break that up for us between debt and equity?
It's too early to do that, right? But generally, we keep it, a more component is equity. So probably 60% equity, 40% debt.
Okay, what is the debt on the books right now? About 300 crores, right?
See, that was as of 31st of December. But as of 31st March, we should end with a net debt of close to about 1800 crores kind of number.
1800 crores of net debt as of 31st of March. So do you have any plans to bring down your debt, or do you think that because of, this production increase, etc., is there a potential of the debt going up further? What is the level that you'd be comfortable at?
See, I think current debt levels are pretty comfortable. Our debt to EBITDA is around 2, which is, by all norms, it's very comfortable. That is point number 1. Second, there is seasonality in debt, given that we are into sugar business as well as urea. So there is a pile-up that happens by 31st of March, but average is going to be much lower. And that's the reason why you see December was 300 and now it's about, March will end close to about 1800. So that explains that's not, throughout the year. It's more of, a lot of it is working capital debt. And so therefore, I don't think that there is any challenge. And the other thing I want to highlight is that a lot of that debt is for the projects that we have undertaken, for which the commissioning is about to start. So we've invested close to about 3,000 crores in chemicals business, and commissioning is yet to start. So, the debt is there, but the returns have not yet come. So I think it'll all even out over the period of time. It's pretty comfortable, right?
Mr. Agarwal, there is weakness which continues in the chemicals and the vinyl business. Could you give us an indication if there is any price, demand recovery, etc.?
Not really, not at this stage, right? There is still surplus globally, as well as, especially in chemicals, there is surplus in India. So we have not seen any respite, and we're not seeing any respite for next couple of quarters. But as far as DCM Shriram is concerned, given that we have multiple other businesses which also contribute significantly, like Shriram Farm Solutions, Fenesta, Sugar, and all these businesses add up to close to about 700, 800 crores of EBITDA. So I think we are placed pretty comfortably.
All right, we'll leave it at that. Thanks a lot for joining in. That is DCM Shriram. They're looking to invest in epoxy resin. They also see a 10% growth in the demand for epoxy resins, and they're going to invest 3,000 crores in terms of capex in the chemicals segment. Well, that's a